Hey Finance fam, welcome to my channel. In today's video, I'm going to give you 7 tips to help you increase your credit score today. Things you can do straight away. Credit scores are important because the higher the credit score you have, the better the interest rate you're going to get with the bank. And when you pay less interest over the life of your loans, that's more money in your pocket for you to invest it. So yes, I'm jazzed about you having a great credit score so that you can pay less money to the banks. And it also helps out with things like insurance rates. Maybe if you have a good score, you'll pay a lower insurance premium. And it also helps with things like if you're going to take out a utility bill, they may not require a deposit at all, or they may just require a lower deposit if you have a good credit score. And I want to help you boost your score. First, we got to start off with what is our credit score actually made up of? There are 5 main things that are taken into account when they calculate your credit score. And by they, I mean the credit bureaus. There are 3 main credit bureaus: Experian, TransUnion, and Equifax. The first thing that goes into your credit score is your payment history. The credit bureaus want to see that you are paying on time, okay? They want reliable borrowers, basically. The second thing that goes into your credit report is the amount you actually owe, or another way to put this is, what is your credit utilization rate? So if you have a credit card with a $10,000 limit, but you have about $2,500 of a balance on that card, your credit utilization rate for that card is 25%. 2,500 of 10,000 is 25%. So the credit bureaus like to see low credit utilization across your cards and just your overall credit utilization in general. The next thing that goes into your credit score is the length of your account history, or the average age of your accounts. Basically, the credit bureaus like to see that you don't date around. They like to see that you actually stick with a partner for a while. This is where they may look at, hey, they have this credit card. How long have they actually had this account for? Have they had it for years? Have they had it for decades? Or is it brand new and has it just been maybe a couple of months that they've had the card? So that's something that goes into your credit score, and the longer history that you have, the better. And then there's your credit mix, and they take this into account when determining your credit score. Credit mix basically means the different types of credit that you have. Do you have only credit card debts, meaning revolving debts, or do you have some installment loans, meaning mortgage or debts, or auto loans, or personal loans? So they like to see, meaning the credit bureaus, they like to see a mix of different types of debt. Now, don't be alarmed if you don't have a mortgage because you don't own a house, or you don't have a car loan because you don't own a car. Maybe you live in the city and you rent and you don't need a car. Don't stress about this, but in general, it is nice to have that different mix of different types of loans for helping boost your credit score a little bit higher. Lastly is the new credit that you have that comes onto your credit report. So if you've done a lot of brand new credit cards at one time, that may not be such a great thing for your score. Say you're doing some Christmas shopping and you go to the department store and you're like, hey, yeah, I'll take my 10% discount by having a card. So you take out a credit card at the department store, and then you go to a Target and they try to get you to get their credit card, and you get a credit card there, and you're getting credit cards at all of these different places at one time or in a short period of time, and you have a lot of new credit. That is something that they'll look at when determining your credit score. It's not a huge percentage, but it is something that goes into account. Now, let's get into 7 ways that you can increase your credit score. The first thing that you can do is make sure that your income is updated with your credit card company. They may be asking you this periodically, and if they do, don't ignore it. Actually answer the question, especially if your income has risen, because what they may do is increase your limits, increase your credit card limits. And what that does is it makes whatever balance that you owe a smaller percentage of your credit card limit, right, of your max. So answer that question if they ask you, and periodically call your credit card company and ask them if you can get a limit increase. That's going to help lower your utilization rate. If you have a $2,500 balance on a $10,000 credit card limit, that's 25% utilization, right? But Let's say that they increase your credit card limit to $15,000 because you gave them your updated income. Well, guess what? That 25% credit utilization rate for that $2,500 balance went from being 25% down to 16% by getting that limit increased. So do it. The second thing that you can do to help boost your credit score is to pay down the credit cards that have the highest utilization rates. So you may have multiple credit cards, and one of those credit cards may actually have a higher balance and utilization rate than others. So in that case, you really want to target that credit card that has the highest utilization rate. Because some people, what they'll do is they'll go for the debt snowball pay down strategy or the debt avalanche pay down strategy. The debt snowball pay down strategy is basically paying down the smallest balance card first, because what that does is you get a smaller balance card paid off and it's zero, and it's like a nice shift of mindset and you feel really accomplished. And then that works for some people. And then some people prefer to go the debt avalanche strategy, where you pay down the highest interest rate card first. That's my preferred method for people. I think that the less interest you can pay over your life, the better. But it depends on your mindset. It depends on, what that debt is attached to mentally. Sometimes for some people, depending on that is which strategy they'll end up using. But what I'm talking about is completely different. It's so looking at the balance of the card in relation to the max limit of the card. And whichever one has that highest rate, you want to get it paid down, or highest balance, you want to get it paid down. The third thing that you can do to help boost your credit is to keep lower balances on multiple cards versus one large balance on one card. If you only have one card, don't go out and get a bunch of different cards. Don't get crazy now on me. If you're paying your balance off in full every single month on time, this probably isn't going to be such a strategy for you. But if you're holding a balance and you have like a large balance on one card and you're not paying it off, then you may want to think about spreading some debt across multiple cards. And instead of continuing to use the one with the high balance, maybe next month start trying to utilize other cards that you have and just have smaller balances on those, and then work on getting that card that has the high balance paid down, of course. The fourth thing that you can do is avoid closing credit card accounts that you don't use. If you have longevity, especially at that bank, and you've had that card for a really long time, definitely do not close the account. You want to see the average age of the account go higher over time, right? They like to see that, the credit bureaus. So the play here is to just keep the account, don't close it down, put the card in a safe. You don't have to use the card, but at least keep the account open. Eventually, the credit card company might close the account on their end if you're not using it and they, for whatever reason, decide to do that. But for the most part, don't close it if you don't have to. If you have a high fee for that credit card that comes, every single year, and you don't want to pay that high fee anymore, then that is a different story. You don't want to continue to have to pay for a rewards credit card that you're not even using, especially if the fee is significant. So that's different, but generally speaking, if you can avoid closing the card, avoid closing the card. The fifth thing that you can do is piggyback off of a partner who has pretty good credit and good payment history and good longevity with banks, and get added as an authorized user on your partner's card. You want to make sure that they're going to take your social security number, they're going to report you to the credit bureau, and essentially you are piggybacking off of your partner, and that's going to help boost your credit score. The sixth thing that you can do is focus on paying down revolving debt over installment or fixed debt. So like I said, revolving debt is like a credit card. There's no fixed payment. The balance is always changing. But an installment loan is something that is like a mortgage or an auto loan. You have a fixed payment every single month, and as you pay that fixed payment, the balance is going down. And so it's very different. And a lot of people, they'll focus on getting their car loans paid down, for example. I know a lot of people that do that while holding credit card debt. And then so it makes a lot more sense to focus on paying down that revolving credit card debt instead. And, usually auto loans are going to be pretty decent rates, a lot better than what you're paying for interest at your credit card. Credit card debt is seen as riskier debt. If you have a lot of it, it something you want to really try to control and pay down. The seventh thing that you can do to increase your credit score is have a good credit mix. Diversification, right? Everything in moderation, diversification is key. Well, it kind of goes the same way here with credit. So if you have some credit card debts, some mortgage debt, an auto loan, maybe a personal loan, that is considered a nice diversified credit mix. But if you can't do that and the only debt you have is credit card debt, that's fine too. Don't stress out about it. But if you have the opportunity and you can diversify your credit mix, the bureaus end up liking seeing that. All right, finance fam, so 7 ways to boost your credit score. The first is going to be go call your credit card company and see if you can get a limit increase, because what that's going to do is it's going to help lower your utilization rate, which is good. The second thing is to try to pay down credit cards with higher utilization rates first. The third thing is to use multiple credit cards to spread balances over instead of having one large balance. Remember, if you're paying your debt off every single month in full, this may not be such strategy for you. But if you have debt that you're holding on a credit card and you're paying interest on it and it's affecting your credit score because the utilization rate is high, try to maybe think about future charges, spreading that out over different cards. Fourth, don't close unused credit card accounts, because we like to see longevity. We like to see the average age of that account become older and older. It's, kind of like a dating scenario. We want to date and we want to be with our partner for a long time. Fifth, try to become an authorized user on a partner's card that has good credit and good payment history. This could help you increase your credit score. Sixth, instead of focusing on paying down that auto loan, focus on paying down that revolving credit card debt instead. This could also help you. And 7, we want to be diversified, so we want to have a nice mix of different types of credit. If you can't do that because your lifestyle just doesn't have you owning a home or owning a car or having a personal loan, don't worry about it. It's not that big of a percentage when it comes to determining your credit score, but it is something that they do take into account. So just something to think about. All right, finance fam, if you learned something today, or if you are going to implement one of these tips, go ahead and smash that like button for me, will ya? And if you like this video, subscribe to my YouTube channel if you're not subscribed, and I'll see you next time.